What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is July 2nd of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we're not only going to be focusing in on cryptocurrencies in the short term, taking a look at the recent correction that we've had over the last few days, but also to focus on the broader perspective, to take a look at the variety of macro factors that are at play in traditional markets that are going to fuel the fire for cryptocurrencies to continue being the best asset class in both 2019 and in 2020. I know that was a mouthful and it's a big claim, but we've got lots to talk about today in the sense of data and topics. Now, before we dive into that, I want to share two things with you all. There is going to be a sponsored interview with Alex Wang, who is the founder of Ember Fund, a really interesting cryptocurrency wallet that allows you to trade like a hedge fund in the sense of being able to buy a basket of different types of cryptocurrencies very simply. So we're going to be having that later on throughout the video. And then also as well, just to share with you guys, if you can make it down to Las Vegas, I've never been there before. It's going to be exciting. It's my first time. I'm going to be attending the Litecoin Summit later on in October. So it's October 28th through the 29th. If you'd like to get more information, I'll have a link down below on it. I'm actually going to be a speaker at the event. And I think I'm going to be speaking in relation to social media and the cryptocurrency space. So if you guys want to come see me, definitely feel free to join. I'd love to have you guys come out. Alrighty, so let's go ahead and take a look at cryptocurrency markets. Over the last 24 hours, very few players are in the green at the moment, with most players down at the moment following the trend of Bitcoin. And we had a lot of players yesterday in the altcoin space that were up 5-10% while Bitcoin was continuing to correct. And a lot of those gains have sadly closed down. We still have some that are up, but again, on the 24-hour measurement, we're getting a red reading on some of these. Now, the good news is that, as I mentioned, as valuations have continued to decline, as we've gone back down to around the $300 billion mark here for valuations, Bitcoin is corrected back down to 10K. We have altcoins in this case starting to gain slight dominance. So again, a lot of this, kind of pressure that Bitcoin was applying on altcoins, a lot of the flush that we saw in altcoins compared to Bitcoin is now being retraced. That is, however, coming a lot in the sense due to the fact that Bitcoin is correcting. Okay, so it's good to take that into mind, and it's why I talked about why we're not in the altcoin cycle the other day, and why I'm confident that we need to wait until we get towards a higher level, around 20,000. Again, the higher the liquidity and valuation gets, the more likely we're supposed to, have in the sense of capital that can flow out into altcoins. It's exactly why in December, that's what we had. And it's why back during 3,000, which was one of the more significant rallies and peaks or changes from the previous peak, it was a 3x, we were able to have such a flush into altcoins. Not to mention, it was one of the first few kind of altcoin cycles that we actually got to have. So again, just something to keep in mind here. Again, we've got a 3% reduction, but I don't think it's severe enough just yet. I don't think we have enough liquidity to really press altcoins much higher. Now, let's go ahead and take a look at the charts, guys. As we can see here, I'll go ahead and turn off my drawings here on the chart, and we'll bring it up in just a sec. You can see here we've had a few more retests. The other day, after I produced my video, we tested down towards around 9,900. We broke through the 10,000 mark and quickly rebounded up towards 10,600, and then we've curled back down over towards 9,800 and retested it a few times. Now, some people, again, would say that this is really good because we're coming up, we're getting a lot of buying activity around 10,000 here. It seems like it's not remaining in that area or that price range for too long. But there's a few things I want to emphasize here. Well, first off, I want to let you all know, I did average down on my position. I added a position. I'd actually gotten a text from my brother telling me that the price had dipped down below 10,000. And right when I caught it, I actually bought a little bit around 10,180. So I just wanted to average in my position because technically it had hit the price range where I started to feel comfortable on adding my first position. And I also have more cash that I want to add if it continues to go lower. And that's going to be my big point here, guys. I don't want you all to miss out on this opportunity. If you guys feel you want to start averaging in, whatever your price range is, make sure you stay consistent to it and don't miss out on this nice discount. We already have a good discount here. I'm just going to draw over this range real quick. Already 30% correction. So we're in the 30% correction territory for Bitcoin. And I know some people would say, but if we're taking it from the exact highs, is that exactly fair? It is. That's exactly what we've done in the previous corrections. Just want to make that clear and, as concise as I can make it in that case. Keeping consistent with the previous corrections in the previous cycles, we take it from the exact high to the exact low. So we're already in 30% territory, but we know that Bitcoin can correct anywhere from 30 to 40%. And that's going to be my major point here. If you really want to try and play for an extra discount, guys, a 35% correction is going to lead you to 9,000. And if we go down to around 40%, this is going to lead us towards the mid $8,000 range, okay? So somewhere in this territory where we've had resistance here in the past, and resistance over here. So this is kind of the target range you're looking for between these two resistance points. Somewhere in between there is where I would get my really ideal position on Bitcoin, and we would get a really nice flush of 40% evaluation. I think we could use that in this market. I think we could at least, at a bare minimum, use a 35% correction in a matter of about 12 days. I think it's very doable with the kind of momentum we've had on the sell side here, and not to mention, with the crazy amount of upside that we had, it would match in that sense. They rise very quick, but they also fall just as hard. That's how cryptocurrencies work a lot of the time. However, right now we have been maintaining quite well in this wedge, and I'd say that we probably need to get one more retest of the highs around here, testing towards a higher range, maybe possibly coming up back towards around 11,000 and then continuing to correct lower. But who knows? We might roll over here. We might continue the very stark sell-off that we've had. And the fact of the matter is that I'm looking to make one more average here. I'm building up my cash position, and I want to hopefully buy somewhere between 35% to 40%. Now, there's a lot of buyers that are going to come in, and the way I can prove that is we can take a look here and look at exactly what happened when we were at the 30% mark, guys. I can adjust my chart here. I had it on the daily. That's why it's a little bit off on the 4 hour here. But we can see here, right when we got to the 30% mark, buyers started coming in, right? So this is something to keep in mind, that other people are watching these levels. Be a little bit less greedy than other traders. Very key lesson to take into mind. Alrighty, so I want to show you guys real quick, because I don't always take a look through the charts here for cryptocurrencies. I want to go ahead and show you guys my key levels here. Sorry, I actually got the wrong exchange pair here. We're going to take a look here at the Poloniex pair for Ethereum. I want to show you guys real quick what are my levels of entry. Anytime Ethereum goes between the levels of 2,300,000 Satoshis and up here towards around 2,800,000 Satoshis or 2,700,000 Satoshis, this range here is where I'm looking to add into Ethereum if I'm trying to increase my Bitcoin comparative. And not to mention as well, I like Ethereum in the sense of the DeFi movement. I think having Ethereum this low comparative to Bitcoin with all the interesting projects that are being built on top of it, not the ICOs, more around the DeFi movement, is giving me a reason why I'd actually want to long Ethereum at this level. Just me personally. XRP, really nothing interesting to me right now as I take a look here. This is the range where I'd want to buy in, and I'd much rather get it down here around 2,700 Satoshis, but it looks like we've still got a ways to go for that to happen, and I think that's going to be through a continued Bitcoin rally over the next few weeks, and XRP not being able to keep up, maybe keeping up its USD, but not its Bitcoin. And then also XLM BTC, this is one that I'm going to be looking for on a really strong discount. I want to see this. I'm not even buying it here at 1,000 Satoshis. I want to see this come down to 700 Satoshis if I even consider a long. Reason being, this was previous resistance back in 2016 as well as over here in 2017. And then it was the support that led to the final rally upwards towards the upper 6,000 Satoshi range. So just wanted to run through some altcoins for you guys. I know it's not all of them, but those are some of the ones that I'm watching right now, some of the levels I'm looking for. I'm not looking for a lot of crazy 20, 30Xs. I'm looking for a few solid 3 to 5Xs, because I know we're going to have multiple opportunities this time around, just like we did last time, where we could have a 3 or 5X. And if I can compound that, if I can make a 3 or 5X and then do it again, I'm either going to make a 9X if I have 2 3Xs. All right, you're basically compounding this case, or you're basically squaring your opportunities. So you can basically have a 9 times return, or if it's 5 by 5, you have 25x in the case of Bitcoin. So that's what I'm looking for, guys. I'm not looking for anything crazy this time around. I mean, that's already crazy enough as is. People would think you're absolutely bonkers if you think you can get that. Not to mention ride Bitcoin, which is going to be performing very well over the next year. So again, just to keep that in mind, that's my kind of mindset. I know some people are going for a little bit more ambitious plays sometimes. All right, so I know we had talked about this yesterday, but I had to start off with it because we are going to be ranting and raving about central banks. And when it comes to central banks, we've got to talk about the Bank of International Settlements. Now, I had recommended, and I'm so happy, I got so many comments yesterday, talking about people wanting to read the Tower of Basel. Some people already jumped on it. They got the audio, or I don't know if I think they were looking for an audiobook. I got some remark for that. But I know a lot of people picked up the Tower of Basel. Really great book. I'm not even shilling it, guys. I don't have a referral code for the book. You guys definitely got to read it, though. It's one of my favorite books because it talks about an organization that everyone needs to know about. The Bank of International Settlements, if you want to simplify it, they are the central bank of central banks. It is where major financial leaders of the world, central bank leaders or governors, and also chairmen, come to meet, as well as other financial leaders across the world and individuals from the IMF, other different types of power players in the world for finance, come to meet, and they discuss the future dictation of monetary policy. They talk about the current state of the economy, economic projections, and new emerging technologies like cryptocurrencies. And this is something we were talking about yesterday, but I love this title on Zero Hedge here. From Ponzi to we're working on it, BSI chief reverses stance on crypto. Now, this isn't a reversal stance on crypto. This is the central bank, or in this case, the BIS, the Bank of International Settlements, coming out and realizing that, quote, many central banks are working on development of cryptocurrencies. We are working on it and supporting them. And this isn't Bitcoin. This is the development of a central bank digital currency. We all know this is no different than Libra. This is no different than JP Morgan coin or Goldman Sachs coin, whatever you want to focus on. Anything that's run through a centralized ledger that can be frozen, that can be censored. It completely breaks what a cryptocurrency is. But we'll let them get away with calling it a cryptocurrency for some time. If they want to live in fantasy land, that's fine. But we're going to be building better solutions that are not only decentralized, but much more convenient and interesting to use, and actually service the needs of those in the underbanked and underdeveloped economies across the world that need cryptocurrencies. But anyways, just wanted to bring that up. And this is going to lead us early into our topic here today. Now, we all know that there is a huge underlying flaw in the current monetary system, and that's that we aren't living in an economy of stability. We aren't living in an economy that's built, for long-term growth and sustainability. We're living in an economy that's building a bubble. It's building a very expansive bubble fundamentally, and this has to do mostly with not only a lot of factors that we've used to prop up markets, but most predominantly monetary policy. And it's the reason why throughout this whole week, guys, I'll jump into this here in just a moment to speak to the irony. We just had one of the G20 meetings, and this article from Bloomberg is talking about how it's go time to take risk on equities. And they're actually not wrong on that. I'll say it is time to take risk on equities. I'm not trying to tell you guys to do it personally. I'm just saying, to bet against equities here over the next few weeks and months would be insane. It would be. And it's not for the reason they state here in Bloomberg. They state because the United States and China have met and they've discussed in relation to, kind of delaying the tensions between both countries to start to reach towards a trade deal, to possibly have the U.S. stop using Huawei and the blockage of Huawei's selling its products in the United States as a first step in this case to actually start bringing a decay in the tensions between the U.S. and China and possibly getting some respect on IP violations, things like this. It is very much a big topic to consider, guys. If we can actually have a resolution on the trade war, this will be good for U.S. markets and global markets abroad, no doubt about it. But it's not why you can have the green light on taking risk on equities. If China resolved these issues tomorrow, it is not a justification for equities to break all-time highs. The justification for that is the reversing trend in monetary policy. And we started to see this as far back as May, how the pullback in central bank assets started to take a turn. We were still reducing it in May, right, in the sense of central bank balance sheets and also in the sense of interest rates. But now what we really have looking forward to is how deep this rate cut's going to go. As we talked about, this is not only just something we talked about in my newsletter, which I recommend you guys check out. I've got a link down below in the description if you guys want to check it out. And if you'd like to get a free copy of it, email us at our contact email and we'll send you a free copy of one of our previous editions. You can see here that we were talking about, we had this, I have not changed this chart, guys. I've had this wedge here since all the way back, I think it was in mid-April, I'd had this chart up, basically stating that once we went into May, if the Fed did not cut rates, we would have a serious correction going through. And we got that. The Fed didn't cut rates. They tried to strengthen the dollar. And look what happened. We were going to play out exactly what happened previously, if not more significant in the sense of price action here. I was guesstimating around a 30% correction, but between these few days, something very drastic changed. The Federal Reserve had not only Fed Chairman Powell eventually come out and state that they were considering interest rate cuts when he was speaking in Chicago, but you also had Fed governors come out from the variety of different branches throughout the United States, hinting towards rate cuts if Mexico tariffs were in place. So it didn't matter what the catalyst was. It didn't matter if it was China fears or fears of tariffs in Mexico. No matter what, when they hinted at a rate cut, you look at what that market did. It popped up It sprung up. It was so excited. It was like, oh my God, we're reversing monetary policy. It looks like we can go back to the 1920s. It's 1999 again. Time to speculate. It's time to ride the wave. It's time to buy the fucking dip, as they say. Sorry for my language. But that's the mentality, guys. It's the pure game at play here. To bet against the NASDAQ, the Dow Jones, the S&P 500 breaking out to new highs, at this point, it's kind of silly. Now, as we take that into mind, how can we tell that we're at the later stage of this cycle? How can we tell that equities are almost done for? Well, you can already start to see liquidity exiting into gold. Okay. Now, some of this comes due to the currency crises we've had. It comes to a lot of different macro factors, but it really comes, in the sense that people are concerned right now. Central banks have been stacking up on gold. We have investors across the world, from family funds to large-scale investment bankers, starting to step in and pick up gold. This is serious momentum, guys. This is a new all-time high for gold for the last 6 years. This is not something to brush off. It's significant. It shows us that fear is starting to come in, even though the central bank is easing markets, even though the punch bowl has been refilled. It's going to be a fun time. The fact of the matter is that investors know that in the next few months to a year, we will top out. We will hit that level where there is just no longer a good risk to reward profile, even with all the easing, even with all the central bank policies that are used to prop up the equity market that we currently live in. No matter what, eventually, commodities will rise back up like gold and silver. No matter what, Bitcoin and cryptocurrencies are going to continue being the best performing asset class. It is a very, very interesting set of times, guys. And I'm glad you all are here to join me in it, because we need to be prepared for this. We need to come prepared. It is going to be a once-in-a-life opportunity to be able to ride these markets the way that they are at the moment. Cryptocurrencies, it's so small. It's so small in the grand scheme of things. Bitcoin at $200 billion, it's nothing. It's nothing at all. So the fact that you guys are here to share in this interesting movement, oh, look, it's at 179 billion right now. The fact that you're here right now is a very, very exciting opportunity. And I'm glad you all can join with me in this journey. So without further ado, let's go ahead and take a look at the interview with Alex Wang from Ember Fund, a really interesting cryptocurrency project. I hope you all will enjoy the interview. What's going on, everyone? My name is Nicholas Merton, and today on our sponsored interview, we're sitting down with Alex, who is the founder of Ember Fund, one of the leading cryptocurrency wallets that allows you to be your own custodian and also trade as if you're a hedge fund. So I know that's a very kind of catchy proposal to send across as a cryptocurrency app, trading as a hedge fund. I want to spend some time, Alex, to ask, what is Ember Fund and what makes it stand out comparative to other wallet apps out there?
Yeah, so Ember Fund is a mobile app that effectively allows anyone in the world to invest like a crypto hedge fund. So what makes it special is that we're actually non-custodial, right? So we never hold your assets, custody your assets, or even really touch the money. And we think that's really important from scalability, security, and global reach kind of perspective.
Interesting. So you guys are basically making it where pretty much anywhere in the world, or at least in most regions of the world, you'll be able to, on your app, hold a basket of cryptocurrencies and basically be able to balance and rebalance that portfolio similar to a hedge fund in that case. Now, there's obviously the limitation of hedge funds, in the case where you have to be an accredited investor, you have to have over $250,000 in yearly income or $1 million in assets. So you guys are democratizing that in a sense and allowing people to do that.
Yep, correct. So like you said, we're really trying to take the financial products that hedge funds and institutions and sophisticated investors use and really make that available to the world. And we think that crypto and blockchain is really the best medium in which to do that.
Yeah, no, I really liked it when you sold me on the idea of kind of like for example, having the ability to access different types of crypto assets and not being the manager of keys. This is something that I wish we saw in more exchanges in the cryptocurrency space that are, obviously the major custodian. Of course, most of it's in cold storage, but at the same time, there's that risk of having everything in a central point of failure.
Yep.
So I think it's really awesome that you guys are pushing the tone of managing keys. I mean, why do you think, at the end of the day, it's very important to have that management of your own keys?
Yeah, so there's a couple of things to that. So number one, it's security, right? Most custodial exchanges have like a treasure trove of assets, making it very vulnerable to hackers. Number two, it allows for more transparency, right? So when everything is recorded on the blockchain, so it's not like we're taking custody of your assets and telling you you're making trades and whatnot. You can actually see everything on the respective blockchains because we're actually lighting up the wallets programmatically. And then another piece of it is scalability. So Coinbase, just a couple days ago went offline because of they had to actually pull assets from cold storage back and forth depending on. So because we're not custodying the assets, there isn't this notion of having to take assets on and offline. So there's a scalability consideration there too. So yeah, that's pretty much it.
Awesome. Okay. So, outside of the factor that it is important in this case for security reasons, and not to mention, I think it speaks to the ethos of cryptocurrencies and blockchain to kind of become your own bank. What you guys have really done, I think that's revolutionary, is the idea that you've provided easy access to get a basket of different crypto assets in this case. And I think, I was talking to Roscoe, one of my close friends in the crypto space, and he said one of the biggest things that he saw as he was teaching thousands of people crypto was one of the big 5 struggles was diversification. So what are some of the kind of baskets that you guys have? And also, how do you go about actually doing that, in a legal sense, kind of allowing people to invest like they would be in a hedge fund?
Absolutely. So you touched on something really interesting there. Like our vision is really to take the financial products that hedge funds and institutions and sophisticated investors use and make that available to the world, right? And we think crypto and blockchain is kind of the medium in which to do that. So talking a little bit more about the funds, we have multiple funds. So we have index funds. We also have more managed funds. And from a regulatory perspective, what's interesting is that because we're non-custodial, we're not pooling together assets like a traditional hedge fund. So with a traditional hedge fund, you have to have, $1 million in assets or make more than $250,000 a year to even gain access to that, right? And that's kind of a whole another world. Whereas for us, we've kind of reimagined how to structure this investment product where the user is taking custody of their own assets, and we're kind of providing the financial technology to rebalance and trade those assets kind of programmatically. And so, yeah, that's kind of our thoughts on that. And in terms of the regulatory piece, as I mentioned, yeah, because we're non-custodial, and also we're not, brokering any securities. We're fully compliant.
So the story goes that basically in the traditional world, I think as you and I have talked about it before, there's just this absolutely, I think it's idiotic, and this barrier that keeps people from being able to invest in assets if you're not accredited. And this is, again, if you're making $250,000 a year, if you have $1 million in assets. And if you don't meet that barrier, you usually can't invest. However, what you guys are doing is providing the application where, because they are the custodian of their own funds, they will be able to basically use this technology to rebalance their portfolio, tracking indexes or funds that are out there that you guys provide. So maybe, for example, exactly. I know that you had mentioned, and we've talked about this, there's the Data Dash fund actually that you guys have put on the Ember wallet.
Yep.
And it basically will rebalance depending on the coins that we have picked or the percentage allocation for each coin.
Yep, correct. So we have index funds and we have funds where you can actually effectively copy the trades of a manager that follows the market 40, 50 hours a week. And the next product that we're really excited about is also having what we call a quant fund. So something that's programmatically traded between Bitcoin and a stable coin.
Awesome. So in the case of the quant fund and your other funds as well, what are the fees associated with it? For example, if I'm holding onto a certain fund that's rebalancing, 2 or 3 times a day, let's say it's one of the more active ones, are you going to incur fees for that rebalancing?
Yeah, so we try to make it super transparent. So first of all, we don't typically find it necessary to rebalance 2 or 3 times a day. Our fees are pretty standard. It's 1.5%, but what we do, and that's on the buy, sell, and the rebalance. What we do though is we're actually searching, more than 8 exchanges for the best price. So what happens most of the time is the cost savings that you're getting from executing the trade on the best exchange, you're getting more than a 1.5% saving there anyways, right?
Yeah, it's the arbitrage in that case, basically the difference in price. Yeah.
Exactly. And so, but we try to make it super simple. It's just 1.5% across the board. And we're super, again, transparent about that. The quant fund will have a different fee structure.
Awesome. And I know you mentioned as well, like you get to actually choose whether or not you want it to rebalance or not. I might, for example, invest in a fund and not want to rebalance when they adjust it over time. And I think it's really interesting that you guys kind of provide that flexibility. I know the user interface is extremely clean. Ever since you guys we know we first met and everything, I've loved the user interface, and it seems like over time it's just gotten better and better. In the sense of where you guys are going in this case, you've obviously democratized hedge fund services, which I think is really awesome. To the average retail audience. What's your kind of next ambition for the application? What are some things that people can look forward to?
Yeah, so I think a big thing for us is continuing to provide these powerful investment products, whether it be a quant fund or more fund managers or index funds. We're really focused on that right now, and then also expanding to be even more global. We think there's a huge opportunity, not only in the US, but outside of the US, where people just don't have access to products like this. And I'd say those are our two core focuses, right? Number one, continuing to curate and create interesting financial products. And then number two, getting that reach, right? Getting to as many people as possible, and keeping that barrier low, right? So our minimums are a couple $100 versus a traditional hedge fund. It's, a couple $100,000.
Cool.
Although we do have customers that have, more than $250,000 on the platform. I think our main focus is to focus on the little guys.
That's awesome, and I like it. I think that the problem I've seen in the crypto space right now, and even you take a look at exchanges like Binance, they seem too institutional or kind of established trader focused in this case. They're not focused on everyday people who need to get access to crypto, which I think gives you guys a really good benefit. Like when we get the next wave of crypto adoption, I think platforms like yours are really going to take off, where you have custody of your own keys, so we don't have to worry about multi-million-dollar exchange hacks, and all these kind of problems that we saw in the last cycle. So hopefully we'll learn from it, and hopefully you guys will come out on top. And the other thing I wanted to talk about, as we mentioned and kind of hinted to earlier, in regards to the Data Dash fund. So Alex, you guys are making all these types of different funds that can allow people to invest in a variety of ways. I know a lot of people here on the channel, for example, like to see what I'm kind of bullish on in this case. And I know on our fund, for example, we have a pretty interesting basket of cryptos, mostly focused on peer-to-peer digital currencies, as that's kind of my focus in the crypto space. But we've, I guess, kind of talked as of recent, and I think we're going to be adding a new coin to that portfolio. So can we add the basic attention token, as I recently built a position in on my channel and shared with everyone?
Absolutely. We're super bullish on BAT, and would be completely stoked to have that coin added to your fund.
So, speaking on that, is there like a range of like how wide does the range go for tokens in this case? Like what can you give people access to in this case? I think that's an interesting question in the sense of building these funds and kind of the opportunities that retail investors can have.
You mean which coins we're planning to add to the platform?
Absolutely. Yeah. Like what's, for example, with any kind of exchange, depending on where you're based and what your audience is, you obviously have limitations in some way, shape or form, I'm assuming, but what's kind of the range of tokens that you guys cover? Yeah.
So we're kind of looking at each coin and looking at making sure that it's, properly decentralized, it has enough liquidity, it's large market cap coin, got a good team behind it, and making sure that there are some coins that are at very high risk of being a security, so there's a regulatory consideration. So we're kind of taking an individual look at every coin before kind of bringing it on the platform, and that's why in our custom portfolio product there aren't that many coins just yet, but we plan to continue kind of looking at coins and adding them on.
Well,
as we see fit.
I like as well, like, so you weren't just focused on the regulatory aspect, but you also do care about the genuine things that matter, like liquidity, making sure you can get a good, trade in that case. You're not going to be paying a huge ask in that case if you're trying to fill an order on market. So I think that that's
Yep.
really awesome that you guys are trying to, again, think about a lot of those background things to provide an optimal experience for, again, someone who's just buying crypto. They just want to simply build a position and hold possibly for the long term or for a multitude of months. So I think it's really awesome what you guys have got going on. Real quick, how can people get engaged with Emberfund in this case? If they like the application, where can they go to learn more about it?
Yeah, you can just go to emberfund.io. That's our website, and there's links to download on both iOS and Android.
Awesome, man. That sounds good. And any kind of like last kind of focus points or remarks to make in regards to what like what makes Emberfund stand out, I guess, against the competition? There's a lot of crypto wallets out there, a lot
Yeah.
of crypto exchanges. What's the kind of killer, application that you guys bring that no one else has done?
Yeah, I think the big piece of it is just automating everything, right? In terms of creating all the wallets, rebalancing, everything is done for you behind a beautiful UI. The experience that we present to you is essentially you opening up an app, depositing in a fund, and that's pretty much it, right? All the technology on the background in terms of the on-device encryption and trade execution, the smart order routing, all that we take care of for you, right? So there's no need to think about API keys, private keys. It's pretty much just in a couple taps you can be invested in these very powerful financial products, and that's what makes us stand out. That's what makes it interesting, and I believe we're the first in the world to do something like this.
Well, Alex, I not only love what you guys are doing on the moral sense, you're pushing the boundaries for retail investors. I like that, for example, as you mentioned there at the end, for those who have wanted to just like rebalance their portfolio or basically track other traders, they've had to manage API keys, do so much complex stuff on the back end that, people either don't have the time for or they simply just, can't get involved in that degree. It's something that I think needs to be kind of democratized, and I'm glad you guys are doing that with your application.
Absolutely, and I think the other piece of it, just being non-custodial, is just really important to us. That's kind of the original point of crypto, and I think that we've kind of lost sight of that in some regard because most 90% of the solutions that are out there are custodial, and we're kind of going back to the pre-crypto days of lack of transparency, hidden fees, security risks, all that. And so I think, the non-custodial piece of that and keeping true with the ethos of crypto is really something that's core to us too. So that's kind of the second piece.
Absolutely. Building on that, Alex, I think very similar to how the intranet was a very big mistake in our understanding of what the internet was going to become. I think people being comfortable with this idea of one central party, even as official as Coinbase or any of these big exchanges that have shown a reputable track record, that they're going to be the sole conduit where you should be storing your funds, I think is going to be one of the biggest like wake up calls we've ever had in the crypto space.
Yeah.
I think it's going to be bigger than Mount Gox whenever something does happen. And we're going to have to learn the hard way in that case that it is important to be your own manager of your keys. It might be difficult, but I think over time, I know you guys probably are exploring this as well, Ember Fund, there's going to be a lot of easier ways to manage a private key over time. I know there's all kinds of interesting technologies coming up, but in the sense of what you guys have done so far, I'm glad you're pushing that narrative. I'm glad you guys have built an easy to use experience that removes all the tedious functionality that traders usually go through, but provide at the same time that opportunity. So Alex, you guys are working on having a fair fee rate for your transactions and the rebalancing on the portfolios that users could hold on the platform. One thing as well that you wanted me to mention as well was that you guys are going through and actually waiving the fees in regards to your platform for the first deposit. Is that correct?
Yep. So just send us an email after your first deposit and let us know that you found out about us through DataDash, and we'll refund your fees.
Awesome. We'll go ahead and we'll leave a basically the email down in the description if you guys want to do that to start your first deposit. Again, Emberfund's not very difficult to onboard to. It's a very simple app. I've looked at the user interface myself, and I really recommend you guys consider it. Just kind of test around with it if you're looking for that next kind of wallet or exchange platform to deposit your funds on. And again, sticking to that core true message of being your own custodian. So If you guys haven't already, definitely go check out the link down below and check them out. Emberfund is one of the best wallets that I've seen personally in the sense of user interface. I know Alex personally over the last few months. Alex, thank you for making the time, man, to come on and spend a little bit of time to talk about what you guys are doing. And hopefully we'll have you back on
Thank
the
you so
channel soon.
much. Thank you so much for having me. I really appreciate it, man.
Hey, it's my pleasure, man. Thanks for coming on.